Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Valesky, and we have Michele Schneider on the line. She's Director of Trading Education and Research for Marketgauge. Michele, how you doing on this Wednesday morning?
I'm doing very well. How are you guys?
We're doing good. We've got a great show going. We've had some great guests, and you're going to fill it up with our third great guest, give some great inputs on the market. Our last guest, mentioned market here up at all-time highs. He's a little nervous, building a cash position. He thinks when we finally do get that Fed rate hike, that we might see a 10% correction in the market. What's your take on both of those things, a potential rate hike and a 10% correction in the market?
Okay, well, start with the rate hike. Right now we're at a very historical point because generally the Federal Reserve doesn't raise rates in a declining market with low commodity prices. But they have a dilemma, and their dilemma, of course, is that they have nowhere to go if things continue to deteriorate with everything at zero. So if they raise now, they may have a little bit leverage down the road. So that's the argument for why it looks like they might. But, of course, the odds that people are saying here are 50-50. Whether or not we get anything out of today's notes on the FOMC remains to be seen. In fact, you guys put out an article that I read earlier that basically said that the notes that come out today, the minutes, are based on what happened 3 weeks ago before China devalued their yuan and, before we've had some really weak numbers, starting with consumer prices this morning, which were weak. So, this is, any of the historical relationships that we're looking for, I think you can pretty much throw out the window because right now we're in a very unique situation all around. So I think that if the Fed goes ahead and raises rates, we will see a reaction. Will it be a 10% reaction? That seems a bit rich to me. I don't know how much investor confidence there's been anyway for so long. In fact, people have been saying since 2013 that this was the most hated bull market ever. And so, generally you'll get a panic if you're very heavily on the bullish side and on the long side if people are fully invested. And, obviously you have hedge funds and you have the 401s and IRAs and stuff that are buy and hold that would get hit, but they don't liquidate. So I don't know about 10% correction. But I will say that a better gauge is just looking at phases, and I'm big on phases. There are 6 phases that we look at. They're cyclical. They go in order, basically, with bullish being at like high noon and bearish being at 6 o'clock. And, the Dow has been in the bearish phase now for a little bit. And if that is a precursor of things to come, what's so incredible right now is NASDAQ, which is still in a bullish phase. So you've got really divergence like I haven't seen in a very, very long time.
Does that scare you? Does that scare you, Michele, when you see divergence like this? I mean, the triple Qs, the Russell, does that give you, going on your past history, is that any reason for concern?
Oh, I think so. Absolutely. And, the other thing is that if you just take the S&P 500, if you look at the 50-day moving average, it has crossed above and below it 22 times already, and I would imagine since it's above it coming in today, and then with a little bit of a dip, it'll go below it. That'll be 23 times. That type of schizoid, type of erratic behavior by an index, a major index, I think does not loom well. And of course, if you just look at the normal cycle of phases, generally they complete their cycles. That doesn't mean they don't go up and down within them. It's hard to predict in terms of how much time or how much percentage of correction it would be. But I will say that it does seem inevitable that things will actually cycle through with the Russells, as you mentioned, which is my granddad of the modern family, being the next one possibly to go into a bearish phase, following in the footsteps of the Dow. The 50 is still pretty far away from the 200. It's sort of teetering around 120, which is kind of pivotal. But there's so much, it's not clear. I think anybody who says it's definitely going down or it's definitely going up, I don't know what crystal ball they're looking at, because I can tell you that there is so many arguments for either case, and that's why I've been calling bulls and bears, basically reading my stuff lately, is sheep. because they're also in a humongous trading range of 2015. So, so IWM, let's say it collapses underneath these levels here today, closes under 120. We've had a recent low 118. Well, guess what? We've been down at 114 this year. So, that's a huge drop without breaking the 2015 trading range. So I would say that I don't think we're going to see anything terribly dramatic in terms of the downside, but I also don't think that we're looking at any kind of major run to the upside either here. I think we're range-bound choppy. We'll reach a new level. We'll chop around it. We'll have a little pop. We'll chop around it. We'll break down again. And pretty much I think we're going to stay in this range until something else happens that's more of a watershed activity. Maybe it's the Fed rate rise. I don't know. But they're going to rise it. They're going to raise it by a very, very small percentage. They're not going to kill the market. They can't.
All right. So, you got any changes in the Modern family here? I mean, without going through, all of them, are there any major changes? Anything that's went from bullish to bearish or bearish to bullish? Anything of note you want to bring attention to our traders and investors?
Yes. Well, I can tell you very quickly that believe it or not, what the best news here, and definitely related to the U.S. economy and reflects not only the cheap oil prices, but somewhat of the recovery of the, that we're seeing with GDP, even though it's been weaker, has been the transportation sector. So transportation was the first one, long before the Dow, to go into a bearish phase. Transportation went into a bearish phase back in May, back in May. And now here we are in August, almost the end, and it's back in a recovery phase, which basically means that it's back over the 50-day moving average, and it's holding. So I think that would be something I would look at as a possible bright spot to help the rest of the market. It was first to tell us the market was in trouble a little bit, certainly wasn't going to go to new highs, and it could be the first to tell us that even though things are starting to deteriorate, maybe will hold up in this range, as I was saying. Secondly, in semiconductors, just the opposite. Semis, which were doing so well, are now, of course, in a bearish phase. They had their death cross a couple of weeks ago. So that has room to the downside, and it's already broken the 2015 range. So, you've got, but semis aren't real indicator of the U.S. economy. Yes, chips and technology is big, but not in terms of infrastructure like we would see with transportation. And then the other, one that I like to watch, the other two, I should say, one is retail. And retail is struggling to hold up here. It's been all over the map in terms of phases. It just came back over the 200. It looks like it's going to break down underneath that again today, but that's got a huge breakdown before we get to a situation where we're in a bearish phase. And then finally, there is regional banks. And regional banks, I think right now, reflect what the possibility is going to be with the Fed. And they're trading pretty much 50-50 on the shot of the rates going up, which they'll like. If the rates are going to stay the same or go down, if you see those PLTs start to rise a little bit, you may see some pressure there, but that's in really good shape. And so that's what I'm saying. It's really, I think, so hard to say what's going on right here. I have to say that I'm trying to look at this from a macro picture, and I think we have a sort of a contrarian market. When things look really crappy, it's time to buy. When things look really good, it's time to sell.
Okay, I've got a question coming out of the chat here. Do you, when you're looking at the transportation, do you split out transportation from delivery and shipping?
No, I don't look at it in that specifics. I'm looking really basically at IYT as a whole unto itself as the reflection that I need. I mean, I know FedEx and UPS are a big part of that. So that's really, to me, what I'm focusing on. I'm not looking at it. I'm not an economist, and so I don't really look at things as finite as that. But I will just say overall, as a general indicator, it does definitely take the pulse. And right now, the pulse is showing that maybe things aren't as bad as people think, except in certain pockets, obviously, that are much, much worse. Like I said, with semiconductors, which even after the good earnings in ADI are still slightly down here this morning.
All right, let's quick look at the commodities markets here. Gold trying to show some life here, finding some resistance at the 1125 level. Any reason to rush out and buy gold here?
I would not before we knew what the Fed is going to do.
Okay.
If the Fed decides to raise a little bit, you know that the gold's going to get hit on that. But I will say that what looks a lot more interesting to me, and I haven't really been all that interested in it until recently, is been the gold miners. GDX, I'm looking at specifically. It's still in a bearish phase, and it's still under the 50-day moving average, but you had a nice basing action at the end of July into August. You had a couple of big rallies there, and it's been consolidating now. I think if you were going to look at anything on the buy side in the metals right now, it would probably be GDX would be the first place I would go.
And the final commodity, crude oil. One of our guests was looking for $33, finding some support just under 42, double bottom there. Any take on the oil market?
The oil market, it doesn't look appealing to me right here. I would have to see something dramatic happen. Having traded oil down on the commodities exchange for years, that's really where I came from before I got into the whole world of equities. This is not typical of a bottoming type of action here, where it basically goes sideways, the volume slacks off. So if there is some major thing that happens, obviously, with the Middle East, we've got issues we'll be looking at. Clearly, there's been some problems now with the bombing in Turkey. You just never know how things can really start to accelerate there to make the oil prices go up, even in spite of the fact that the spigots have been on. At this point, like I said, maybe if we got back over $15 in the USO, which would probably equate to about 50 in the cash, that would be interesting. But right here, I have no interest in playing the oil market until I see some reason, and I certainly wouldn't go short at these prices because I'm not sure what your risk would be to the upside unless you were doing it for quick trade.
Michele, I saw you tweeting about some of your favorite long picks earlier this week. You were saying some were outperforming, some are moving up from behind, some are even in the red. They seem pretty diverse in terms of sectors. Can you share with us some of your long picks?
Yes, well, let me see. I think Facebook was one of them. So let's take a look at Facebook. Now, Facebook is certainly taking its time on getting up towards the highs that it had in July. But it's certainly, if you look at the market, it's holding up very, very well. So I think at some point we will see Facebook at higher prices, maybe over 100, maybe even up to 110. Again, you always have to, if you put on a trade like Facebook, you have to think about what your risk is. And I think I would use a 50-day moving average risk to that on that if I were looking at it. But I still am very, very friendly to Facebook. I also mentioned Alaska Airlines, that's ALK, and look at that. That's near the high. So I don't see any reason with low oil prices for that to sell off. Again, it would be a matter of time frame. It's already made a tremendous move, but I still think that has more to the upside. Let's see, what else did I mention? First Solar. Is that what I mentioned? I have to look back at my own picks.
It's been a long week.
It's been a long week already, and it's only Wednesday. Let's see, what else do I have? So let's take a look at First Solar, because the Solars, it had that huge pop after earnings. And now, obviously with the pressure of the market, it's down here on the opening. But at the same token, it is also holding the gap low from when it gapped up, which was on August 5th. So if we hold those lows around 49, I think that First Solar has potential to the upside. I know the other one, and I think the other one I mentioned, and I may be leaving one out, is General Motors.
Yes.
Which, again, General Motors made a nice low a couple of weeks ago. Actually, not even a couple of weeks ago. Let's see when the date was on that. Date on that was August 12th. It made a new low for the year, hopped back, closed well, has gotten followed through, now going a little bit sideways. I like that as well. I think if that gets a close over 32, we could really start to see some basing in that as in there. So there you go. I think those were my top long picks. I had a couple of short picks too in there, but those were my top long ones. Oh, maybe was there one more? No, I think that was it. Oh, Autodesk. That was the other one.
Yeah. Tell us what your thoughts on AutoZone are.
Well, Autodesk, interestingly enough, right now had made a nice move already when it's coming into the week, and now it's selling off again with the market. So if that holds to 50, I think you have a nice double bottoming action there. That would be another place to look. To just go ahead and go in and jump in and buy right here, obviously with the market under pressure, you have to respect the macro picture. But if those things sell off to a good support level, especially, as I mentioned, Autodesk and General Motors, if they hold up, and First Solar, I think you've got some good ones to look at. Should the market turn back around, they'll go up very, very strongly.
Michele, we've only got a couple of minutes left with you, but why don't you share one or two of your picks that you're looking at on the short side?
On the short side, well, one I had been looking at coming into, well, I've already mentioned it, it's already made a big move down. So again, the risk starts to get out of whack. But Procter and Gamble, I had mentioned as a short pick. It's getting a little oversold right here today. It's down over 1%. But that was one coming into this week that's already sold off quite a bit. Maybe it's going to find some support. It just broke the 200 weekly moving average, and your next real support doesn't come into around 69. So I probably wouldn't sell weakness here. I'd probably wait for some kind of a pop. But that was one of my picks. Another one was LRCX. And LRCX here on a monthly basis has some support coming in at around 68.50. On the daily chart, though, it looks like it could actually get there. And I don't even think it's too late to get into that one in terms of being short, as long as you knew what your risk was and what type of trade you wanted to do. So those two still look really weak. And LinkedIn was another one.
Really?
Yeah, LinkedIn is just, it's sitting around here near its recent lows, but it certainly hasn't made any kind of big move, which tells me that it may not be done. It hasn't had any dramatic reason to show that it's bottoming here. And essentially your next major support doesn't come into around 171. So I think those were the top. Oh, and Sandisk was the final one. And that, too, is below a major weekly moving average. It's breaking down. So, you had a big gap up after its reported earnings, and now it just filled that gap. When something fills a big gap like that to the downside, then to me, it's time to start to sell the rallies. So these are my top favorite short picks and my long ones.
We've been on the line with Michele Schneider. She's the Director of Trading Education and Research for Marketgauge. Michele, I've got one more question for you coming from the chat. The question is that Iranian oil has yet to come out in the market. What will happen next when Iran will supply 1 million barrels?
Well, that's exactly what I said before. I don't think I'm seeing any kind of bottom here in oil. I don't think it's the best short in the world unless you're doing it very short term. But yeah, oil definitely looks vulnerable here, and that's why transportation could continue to do well in spite of everything else. Because let's face it, cheap oil prices is a double-edged sword. It's wonderful for consumers. It's wonderful for moving costs of goods and services, and it's awful when you're looking at deflationary factors. So depending on where you look, I would say that oil right now doesn't look like it's bottoming anytime soon to me.
Michele Schneider, Director of Trading Education and Research for Marketgauge. Thank you so much for joining us this morning. We really appreciate it. We'll have to bring you back on again soon.
Oh, thank you. Thank you so much. It's always a pleasure. You guys have a great rest of the summer.
Thanks. You do the same.